Satoshi, the volume strategy. Satoshi was on a roll. His next-gen tech win had boosted his confidence. He started making small, quick trades, trying to replicate his success. He bought into Swift Motors when it broke a resistance level, just like before. But this time, the breakout fizzled, and the stock fell back down, handing him a small loss. The pattern was the same, he puzzled, but the result was different. What did I miss? He mentioned the trade to Priya. It looked like a breakout, but the volume was weak, he admitted. Priya nodded thoughtfully. My uncle is a bit of a market wizard. He always says price is the headline, but volume is the real story. Maybe you should talk to him. His name is Mr. Verma. Mr. Verma's study was quiet, filled with books and a single, uncluttered monitor. He was an older man with calm, observant eyes. Satoshi explained his trade. Mr. Verma listened, then simply said, "A car can't go far without fuel. A stock can't go far without volume. Volume is the fuel of the market. It shows conviction. Big players, institutional funds, can't buy or sell all at once without moving the price too much." Mr. Verma continued, "So they do it quietly. This is accumulation and distribution." He pulled up a chart. See this? The stock price is flat, but on days it ticks up, volume is high. On days it drifts down, volume is low. This is quiet buying. This is accumulation. Satoshi was fascinated. He started watching Zenith Solar, a company with solid fundamentals that had been trading sideways for weeks. He applied Mr. Verma's lesson, making notes. Volume insight. For 2 weeks, every time Zenith Solar's price increased, the volume was 50% higher than the daily average. On days it fell, the volume was light. The big players are getting in before the news breaks. Now, look at the opposite, Mr. Verma said on their next meeting. A stock that has been in a long, powerful uptrend. Suddenly, you see a day with the biggest volume in a year, but the price barely closes higher. This is a climax top. The last of the dumb money is rushing in, and the smart money is selling to them. The party is ending. A few days later, a stock called Hyperdrive AI was all over social media. It had gone up 500% in a month. The hype was deafening. Satoshi felt the familiar pull of FOMO. But then he looked at the chart. The price had shot up that morning, but on a colossal, record-breaking volume spike. It looked exactly like Mr. Verma's drawing. A climax top, he whispered, and closed the trading app. The next morning, Hyperdrive AI crashed, losing 50% of its value at the opening bell. Meanwhile, Zenith Solar released a stellar earnings report. The stock gapped up, and the price began to climb steadily on strong, healthy volume. Satoshi placed a buy order, not with frantic hope, but with quiet confidence. He finally understood. The volume strategy wasn't just a single signal. It was about reading the entire narrative. It was the difference between hearing the shouting and understanding the conversation. The volume strategy. Use volume to confirm trends. Enter when you see signs of accumulation, smart money buying. And exit when you see signs of distribution or climax, smart money selling. Satoshi sold his Zenith Solar shares a few weeks later for a solid profit. He sent a simple message to Mr. Verma. "Thank you. I'm learning to listen to the whole story." He still had a lot to learn, but he was no longer just chasing prices. He was reading the market's intentions, one volume bar at a time.